Kia ora, I'm Ryan Bridge and welcome to episode 4 of Bridge Talks Business with Milford. If you haven't already, like, follow, subscribe wherever you choose to watch or listen. It's reporting season here in New Zealand. While the news has been good for a few, there is no doubt that the slowing economy is taking its toll on most. We'll look at what light the results can shed on our fortunes for the year ahead with our feature interview in just a second. But first, Top 5 number 1 AI chip-making superhero Nvidia reported profit gains, but shares sank, with most investors already on board and expectations at elevated levels. Number 2, Aussie's still hot, but too hot to cool down. I'm not talking about the temperature. Inflation slowed to 3.5% year on year, but still too hot for the RBA. No rate cuts in the foreseeable. Number 3, in the US, the data is fighting fears of a slowdown. Second quarter GDP, solid consumer spending, and benign jobs data there, the high-frequency kind. The Fed meets this month, and this Friday's unemployment data release will help guide any decisions there. Number 4, New Zealand business is feeling itself. Confidence surging to 10-year highs in August, fueled by feel-good rate cuts. Number 5, but confidence ain't cash. The survey pointed to weak current trading conditions, something that is backed up by the Kiwi reporting season here. Joining me in today's episode is Michael Luke, Milford's co-portfolio manager. Michael, thanks for being on the show.
Hey, Ron. Great to be here.
Good to have you here. Just a note for those who are watching or who are listening at home, this segment is informational only and should not be considered financial advice. Michael, reporting season. Are you just loving this?
It's certainly a busy time for us. Lots of company meetings out on the road, getting the real pulse of what's going on in our stock market and the local economy.
So we'll talk about the results in a second and what they have told us about the past and crucially about the future.
Yep.
But how are the markets reacting to reporting season?
Yeah, so overall, the New Zealand share market was pretty flat. Now, that's after being up nearly 6% in July. So July was all about the Reserve Bank cutting rates. August was all about company results. And if I think about some of the performers, while the share market was pretty flat, within that, we saw some pretty big moves. So top performers being Kathmandu, up over 20%, Vista Group, up over 20%. And we also saw a number of kind of income shares kind of perform strongly as well. While on the other hand, some of the maybe more disappointments were companies like A2 Milk, Spark, which were down about 20%.
Yeah, so A2 Milk, a lot to do with China?
Yeah, so A2 Milk, they're primarily exporting infant formula to China, and that market's really tough. So that weighed on their outlook a little bit.
And Spark has been hit by, because I guess you look at countries like Australia and America in terms of government spending, they are sort of not pulling back quite as much as our government is here. Is that what is affecting Spark's result?
Yeah, it's quite an interesting one because other countries like Australia and the US, their governments are still kind of spending, while in New Zealand, our government is really cutting back. So we've seen companies like Spark, which is traditionally pretty resilient. People don't really cut, kind of phone lines. But Spark also has quite a large IT services business doing a lot of work with government. And kind of government's really cut back on IT spending. A lot of those technology projects have been put on hold, and that really impacted Spark's result.
Interesting that similar story for Air New Zealand, right? Because they are quite reliant on government spend when it comes to business travel.
Yeah, so similar thing with Air New Zealand. They're doing it quite tough, and they kind of called out that government spend on travel is down about 30% compared to corporates down 9%. So government and businesses cutting back on travels impacting companies like Air New Zealand as well.
Okay, so how would you describe the market then, reaction to reporting season? Pretty stable or volatile, I guess, depending on where you look.
Volatile, overs and unders. There's always over and unders. I think particularly the outlooks from some of our more kind of domestic companies, they were probably a bit softer, as you'd expect with what's going on in the economy.
Yeah, let's talk about that. Let's talk about, because obviously the Reserve Bank was aware that things were bad, and so they cut rates. When we look at these reports, how bad did it get, in actuality for these companies, and when did it get really bad?
I think from company results, it's really clear that the decline in the economy started maybe slowly and then really accelerated throughout the year, particularly in May and June. And if you think about some of the results, you had Fletcher Building. Now, they kind of said that construction volumes activity was down about 25%, and that flowed through to their earnings being down 60%. And Fletcher Building's expecting building activity to drop another 10 to 15% over the next 12 months. So that's one example. Two other examples is like Spark, like I said, really only in the last couple months did they see that big slowdown in IT spending. And then we've also seen other companies like Heartland Bank kind of call out that just in the last few months, they've been seeing businesses struggling to pay their debts a bit. So really accelerated into May and June.
Interesting how, well, sad, but also interesting how, depending on what line of work you're in and what type of business you are, how the timeline of that slowdown affects you, right?
Yeah. Yeah, it's really depended where you are in the economy, and we've kind of seen how the kind of economic cycle plays out. So if you think about it, consumer spending, house prices were hit pretty early, while it's kind of more recently we've seen things like IT spending getting cut. And with the example of Fletcher Building, the building sector hanged in there for a while, while they kind of completed existing work. The issue was new projects aren't getting started. So now that they've finished all those old projects, there's been a big drop-off. And finally, we're starting to see it impact companies like Heartland Bank, where now you're having some companies enter insolvency and struggling to pay their debts.
Let's talk about some good news, because we've covered a lot of bad. Fisher & Paykel, so they're obviously one of our premium exporters.
Yeah.
They're not as exposed to the Kiwi market. How have they done?
Yeah, so it's been the exporters which have performed a little bit better. Fisher & Paykel Healthcare, now they are a world leader in medical devices for respiratory care. And so their growth is really about clinical adoption rather than the economy. And they increased their profit guidance during the month, which was well received by investors. So, some of those exporters are performing a lot better, exposed to economies, not like New Zealand.
How would you define performing well in the current environment? Is it, obviously it's not going to be super profits or anything like that. Is it sort of just basically being in line with what you told the market you would be?
Yeah, well, expectations going into results were quite negative. Investors were quite concerned. So companies that just delivered in line with guidance, it was kind of a welcome relief for investors. Or companies where maybe the results were bad, but less bad than feared, did well. It was really the kind of companies that you knew were going to be bad, they were probably a bit worse than what you expected, which were under pressure.
Yeah. Right, let's talk about travel, because obviously it's a big market for New Zealand, big export dollar for us. Tourism, how did Air New Zealand, we've spoken about Air New Zealand, but Auckland Airport, how are they faring? And what are they saying about those visitor numbers? Because we're not back to pre-COVID levels, are we?
Yeah, so Auckland Airport, they had pretty strong earnings growth as kind of travel rebounds, post-borders reopening. However, their outlook, they're expecting a bit lower growth in the year ahead. And that's because the kind of travel recovery is stalling a little bit or slowing down. And they kind of also pushed out when they expect travel to return to 2019 levels to about 2027. And if we think about what's driving that, it's two things. It's weaker demand and some supply constraints. So starting with demand, it is very expensive to travel to New Zealand. We're a long-haul destination. And it's also quite expensive once you get here. So I think we are seeing some travellers choose to go to cheaper travel destinations. I think one example is Australia. So Australia makes up about 40% of tourists to New Zealand, and they're only back at 86% of 2019 levels, because Australians, they're travelling to markets like Japan and Bali instead of New Zealand. So we need the Australians to come back, really.
Yeah, but the problem is the beer is so cheap in Bali.
I know.
All right, so that's the demand side of it. What about the supply? Because this is the aircraft issue that Air New Zealand, most airlines have been affected by, right, including Air New Zealand.
Yeah, so I guess on the supply side, when COVID happened, airlines really cut back on new aircraft orders, right? And in response, the manufacturers, Boeing, Airbus, they really downsized because people didn't want to buy airplanes. Now that kind of borders have reopened, however, there's a shortage of aircraft where Boeing and Airbus are kind of scaling up to try and build more aircraft. But there's a global shortage of planes. So what that means is there's still some airlines that haven't returned to New Zealand. And on existing routes, there's less planes flying than were back in 2019. So we also need some of those kind of supply or airlines to return.
Does that actually, in a funny way, almost create more of a monopoly for the likes of Air New Zealand, potentially more earning potential?
Yeah, in some areas, but actually for Air New Zealand, like one of their main routes is to America. Now, that route has become extremely competitive because of relations between China and the US. You've seen the US kind of redeploy aircraft that was going to China. So actually, there's a lot of planes coming from North America, and actually, I think US arrivals are back above 2019 levels. So you'd think so, but competition's actually really tough on some of Air New Zealand's routes, like North America.
This is fascinating information. Where do you get all this information? Are you just sitting there scrolling constantly and getting these updates? Because obviously you've got to be across a whole bunch of stuff, right?
Yeah, it's always speaking lots of companies, reading lots of results. You find companies like Air New Zealand, they do provide a lot of information kind of during their reporting, and they called that out specifically.
And as part of your job, do you actually go and visit some of these companies and meet them and ask them questions?
Yeah, so a big part of our job is going out there and meeting companies. So during reporting season, we're out there on the road, trying to meet the majority of the New Zealand companies that reported. And, that kind of goes into our investment process in terms of trying, to find great investment opportunities for our clients.
Let's talk about the future. Because obviously everybody wants to know what's going to happen.
Yeah.
When is it going to happen and when is it going to get better? There's sort of game of two halves here, according to these results. Tell us about the next 6 months.
Yeah. I think the reality is it's really tough right now. We've got high interest rates, high cost of living, and you've got government and businesses cutting costs. So, speaking to companies, a lot of companies are still expecting earnings to fall over the next 6 months, and they're taking out costs as a result. So I think the reality is the next 6 months are going to be tough, but there is some optimism returning that with interest rate cuts, this time next year could hopefully be a lot better.
How confident are they that it will get better after this sort of short-term, rough patch, the continuation of this rough patch? How confident are these results or are these reports saying that they are?
Well, I think it depends where you are in the economy. Currently, it's kind of optimism because if you look out there right now, trading's still tough. So it's kind of optimism that things will improve next year.
And we saw that with the swing, the uptick in the confidence survey, right?
Yeah.
Suddenly everybody was excited, not necessarily because things are better, but they're just hoping they will be.
Yeah, I think conditions were just so tough. So when the Reserve Bank did cut interest rates and signaled that they're going to continue to cut interest rates potentially, it was a kind of welcome sigh of relief and, big boost to optimism. The question, I guess, is how long that takes to flow through to activity. And, we've spoken about it before, but there's quite a lag between interest rates and the economy. It took quite a while for the full impact of those interest rate rises in 22 and 23 to be felt. And it's also going to take a bit of time for those interest rate cuts to trickle down to the economy. But I think it could happen quicker this time, however, because households have kind of moved to shorter dated mortgage rates. So, they should feel that benefit sooner, hopefully.
All right, Michael, tell us, you've been reading the reports. Who's performed well?
Yeah, so some of the more kind of defensive companies performed well during reporting, delivering pretty resilient results. One example that comes to mind is Chorus. Now, they recently finished building a large proportion of New Zealand's fibre network. Now, they reported a result that was in line with budgets. However, they increased their outlook for dividends. Now that the kind of investment in fibre rollout has rolled off, they're now starting to pay higher dividends to shareholders. And that was well rewarded by the market. And I think Chorus finished up about 8%.
Why are you calling it a defensive company? What does that mean?
Yeah, so companies like Chorus, so Chorus provides fibre, and things have to get pretty bad before you start cutting your kind of internet connection. So we saw Chorus perform pretty resiliently compared to the likes of Spark which came under pressure with some of the pullback in IT services spend.
Defensive companies, you're meaning by defensive, I'm an idiot basically, but I'm trying to understand. Defensive means like a safe company typically?
Yeah, so typically companies that are kind of more immune to the economic cycle. So if you think about what companies are still doing well right now, it's companies like Chorus, which provides fiber, as well as the kind of electricity companies, very steady, stable companies.
What about the other big thing we talk about in the media is the electricity prices and the spot market? Is that affecting results of particular companies?
So the electricity companies, they reported pretty resilient results. I think management teams were pretty mindful of the impact of higher electricity prices. So a lot of focus on their results was on their large kind of renewable energy development pipelines and kind of bringing new supply on to kind of help the electricity market.
Michael, thank you so much for coming on the show. Great to have you.
Thanks, Ryan. It's great to be here.
That was Michael Luke, one of Milford's co-portfolio managers. Before I leave you for this episode, let's take a look ahead. The big event this week globally is the US employment data. It's out Friday night New Zealand time. Important for a couple of reasons. Last month saw a weaker US employment report, which was one of the reasons we saw market volatility in August. People were worried about a slowdown there. Furthermore, last month the Federal Reserve was very clear it has no appetite for a rise in unemployment, and that means this data is crucial. It will be a key driver of US monetary policy going forward. That decision, as do most in the world's largest economy, will undoubtedly affect us here in the Shaky Isles too. Until next week, subscribe, see you soon.